Yes, people, a very, very happy evening to all of you. Thank you so much. So guys, in the last class, we started with a brand new topic, which is rules of debit, credit, and the accounting procedure. Last class, I said I want to discuss four things with you. One is the meaning of account, second is the meaning of debit, third, credit, and fourth, accounting process, accounting procedure. Today, okay, last class, what we discussed is out of these four, we discussed what is the meaning of accounting, what is debit, what is credit, all these three over. Accounting procedure or accounting process, I wanted to discuss today. But for a change, what I feel is let's go to the next step, which is the rules of debit credit. Once I make you understand the golden rule, once you understand something about accounts little bit more than what you already know, when I come back to discuss the accounting process and procedure, things will make little bit more sense is what I feel. So for the very first time, I'm trying to change the process a bit. So today we'll focus on rules of debit credit. Okay. In that one rule we'll cover today. We'll cover up one rule. 2 classes will be taken for this. Well, before that, let's do a very quick recap of what we did in the last class. What is the meaning of account? Sir, account is a place where all the transactions of similar nature are recorded. All the transactions of similar nature are recorded. Up in business, throughout the year, all 365 days, where and all in the business, cash is received, cash is paid, all that is captured in one account called as cash account. So if I go to cash account, in one side of the cash account, inflow of the money will be there. In another side of cash account, outflow of the money will be there. Got it, not got it? Okay. Throughout the year, you do sales. If I want to know the information about sales, so that is documented in a place called as sales account. So sales related transaction is captured in the sale account. Purchase related transaction is captured in the purchase account. All the bank related transactions captured in the bank account. All the land that I purchase is recorded in the land account. If I buy machines, machines, all the data is recorded in machine account. If I want to see the details of the salary or what is paid to my employees, that will be captured in the salary account. Got it, not got it? So account is a place where all the transactions of similar nature are recorded. Now, this account, what format it is, sir? What format it is? Is it a statement format which we write one after the other? Is it a statement format? No. It is a T-shaped format. It is a T-shaped format. So a transaction of one nature is recorded on one side and of the opposite nature is recorded on other side. For example, cash is coming in will be recorded on debit side. Cash going out will be recorded on credit side. Got it, not got it? If I record any expenses, it will come on debit side. If I reverse any expenses, reversal of expenses will come on credit side. Got it, not got it? Clear or not clear? So in expenses, we have two categories. One category will come to one side, another category will go to another side. Got it, not got it? Okay. So this account is what format, people? What format does it look like? It's a T-shaped format. It's a T-shaped format. This T-shaped format has got how many sides? It has got how many sides? 2 sides. The left-hand side is called as debit and the right-hand side is called as credit. Got it, not got it? If any amount is recorded on the debit side of the expenses account, we say that expense account is debited by so much amount. If I record any amount on the credit side, we say so much money is credited to expense account. Got it, not got it? Okay. So are we clear with the meaning of account? Are we clear with the meaning of account? Okay. What is the meaning of debit and credit? In simple layman language, I said debit and credit is nothing but, if I have to correlate this with max, it is nothing but plus and minus. There is debit is plus, credit minus? No. Debit will sometimes act as plus, sometimes act as minus. It will depend on the rule. So the rule that we are going to study, that rule will teach us debit when it will act as plus, when it will act as minus. Credit will sometimes act as plus, sometimes act as minus. So the entire purpose of debit and credit, whatever debit and credit you do, ultimately, if you see in mathematics point of view, it is leading to addition and subtraction. So debit and credit is nothing but plus and minus. Got it, not got it? The logic of this you'll understand when I do couple of more classes. When I complete the ledger topic, you'll feel more comfortable with the debit credit being plus and minus. Okay, not okay. This debit and credit is got a short form abbreviation called as DR and CR. Right? DR is an abbreviation coming not from the debit word. It is coming from the Latin word debier. This word debier is given by whom? Sir Luca di Pacioli. Who is he? Italian mathematician. Who is he? Italian mathematician. We call him as father of accounting. Father of accounting. So he, as a mathematician, developed the concept of accounting. He developed the concept of double entry system of accounting. What concept? Double entry system of accounting. Where he said that every transactions will have twofold aspects. Twofold aspect. One aspect is debit, another is credit. So in their language, debit was debier, credit was credier. Debier, credier, it was too difficult to pronounce. So they gave short form DR and CR. So debier became DR, credier became CR. But in India, we converted the word debier to debit and credit to credit. But as a token of respect to Sir Luca di Pacioli, the abbreviation what he created, we retained as it is. Got it, not got it? Clear or not clear? Okay. So this much we had a discussion in the last class. So instead of discussing the accounting process, I'm directly going to the classification of account. Classification of account. So all of you know what is the meaning of account now? Cash account, salary account, purchase account, land account, bank account, machinery account, furniture account, rent account. Got it, not got it? Yes or no? Okay. In business, you'll come across transactions. What is transaction? What is transaction? Sir, it is either exchange or transfer. Exchange or transfer of what? Goods or service or funds between two party. In that one is business, another is third party. This is called as transaction. So whenever any transaction is given, from the transactions, you know what are you supposed to pick up? What are you supposed to collect from the transaction? Accounts. You're supposed to pick account. For example, business purchased goods worth 10,000 and paid cash. Any problem? Business purchased goods worth 10,000 and paid cash. Business purchased goods worth 10,000 and paid cash. Is this a transaction or not? Is this a transaction or not? How do you say this is a transaction? Sir, in this, goods is getting exchanged with money. So it involves exchange of goods with money on the spot. It is not just transfer, it is exchange. Okay. This exchange is happening between two people. One is business and some other third party, because you're buying this from some third party, you know. So this is a transaction. This is a transaction. Okay. In this transaction, next, what are you supposed to identify? You're supposed to identify accounts involved. Okay, let's do one thing. Let's not deviate any process. We'll go to accounting process. Rules we'll do some other day. Accounting processes we'll do. Now, what is accounting? What is accounting? Sir, accounting is a systematic process. I'll come back to this. This I will do. I'll continue again. What is accounting process? Sir, accounting is a systematic process. You cannot do accounting the way you feel like doing. The accounting experts, after thinking a lot, they have come out with a systematic process of accounting. So there is a proper system, and that system is what we're going to learn in entire 11th and 12th. So accounting is what? Sir, it's a systematic process. What? Of what? Of identifying a BFT or a BFE. The very first step of accounting, the very first step of accounting is to identify whether the line which is given here, the line which I gave here, is a transaction or an event. Is this a transaction or an event? BFT stands for business financial transaction. BFE stands for business financial event. Now, what is the meaning of transaction? We already discussed now. Transaction means exchange or transfer of goods, service or money between two party, in which one is business and another is third party. So now, in the line in the line transaction agree பண்ணியாச்சு. This line is transaction, all of us are agreeing. Okay. Okay. What is an event? What is an event? Result of transaction is an event. Result of a transaction is an event. Got it, not got it? Can you give example of event what I gave earlier? Very good. Sir, the profit what we calculate in the business, no, for that you have to pass a journal entry. So for that, you have to pass a journal entry. For that, you have to identify whether that profit is a transaction or an event. So profit, is it something that you can exchange between somebody? Can you transfer and get it? No. Whatever transaction happens in the business, if I combine all the transactions put together, if I combine income together, if I combine expenses together, if I set off this together, I get event, which is net profit, which I get profit. So profit is a result of the transactions that you record. So this event has to be captured. So you will capture two data in accounts. You will capture one transaction ka data, second event ka data. Apana, you need to know which part is transaction part, which is event part. So I'm telling you, whatever is a result of transaction is event. So I told you profit, whatever you calculate, you have to pass an entry for that. No, that is an event. That is an entry for event. Entry for event. Got it? Not got it? This is a transaction. This is the entry for transaction. So the journal entry what you pass, the journal entry what you pass will be passed either for a transaction or event. So the entry what you're going to pass, you have to be clear whether the entry is being passed for a transaction or event. Got it? Not got it? So if I pass any journal entry for profit, it is not a transaction, it is event. If I pass any journal entry for closing stock, it is event. If I pass any journal entry for closing stock, it is event. Got it? Not got it? So when a data is given to you in exam, you need to differentiate whether this is transaction or event. Got it? Not got it? So your first step is identification of transaction, identification of event. Got it? Not got it? So a businessman is recording closing stock worth 2 lakh rupees. A businessman is recording closing stock worth 2 lakh rupees. Is it transaction or event? It is event. A businessman is recording 2 lakh of profit in business. Transaction or event? Event. Business is purchasing goods worth 10,000 and paid cash. Transaction or event? Transaction. Are you able to feel it? Transaction will have third party. Transaction will involve third party. Event will not involve any third party. Event is with us only. Got it? Not got it? My profit, I cannot buy from somebody, boss. Profit, can I buy from somebody? Not possible. So profit is my own result. My own result. Closing stock is my own result. How does closing stock come? 10 laptops I purchased. In that 9 sold. How much is pending? 1. In the 1 laptop, separately as a closing stock, are you buying from somebody? No. It is a result of your transaction. நீ வாங்கின 10ல 9 வித்திருக்க. அப்ப நான் ஒண்ணுங்கிறது மிச்சம். It is come on its own. It's an event. Got it? Not got it? So in a business, when any data is given to you, who are you? Accountant. Who are you? Chartered accountant. You need to identify whether this data is a transaction or event. This is the first step. Okay, va? Okay. This transaction and what event you identified, no? This transaction event should have financial nature. Should have financial nature. Financial nature means what? It should have monetary value. It should have monetary value. Got it? Not got it? Now, so why should we have monetary value? Because accounts deals with numbers. If I have to record any data abdina, I have to record the number 2 lakh, 3 lakh, 30,000, 40,000, any number. Got it? Not got it? In business, some transaction takes place where it is non-financial. Some transaction takes place where there is non-financial. Some event takes place non-financial. But that can we record? No. But which transaction should I take into business? Financial transaction, financial event. Got it? Not got it? Sir, can you give example of non-financial transaction? Non-financial transaction. Now, stuff. Any problem? No problem? Okay. SPJ. Me, Pratik sir. Hair is there. Now, I called this staff for interview. Interview went very well. I love the confidence of the staff. Very hardworking, very determined person. So what did I do is on the spot, I gave letter. Don't think otherwise. I gave letter. That letter is called as offer letter. Just because I'm praising, don't take it otherwise. I gave letter means it is offer letter. Job offer letter. You don't take otherwise. I know dirty people, dirty, they think. As if I'm giving love letter. No, I'm giving job offer letter. Yes or no? I'm giving an offer letter to somebody. Yes or no? Now, is this a transaction or not? Yes. Because this is involving transfer of offer letter. I'm giving a offer letter. I'm giving a offer letter. Transfer of offer. This is happening between two party. In that one is business, another is third party. Okay, va? This is a transaction. இதுக்கு accounting entry என்ன pass பண்ணுவீங்க? What is the amount you will record here? Nothing. So this is called as a non-financial transaction. This is called as a non-financial transaction. Only that transaction I can record in the books of accounts, which has got financial value to it. And non-financial transaction cannot be recorded in the books of accounts. Okay, not okay. Tell me no. Is this a transaction or not? I'm giving what? Offer letter. Offer letter is what? Exchange or transfer. Transfer. I'm giving the letter is getting transferred from my hand to staff hand. Yes or no? Hell no. In that, this has been done by one party to another party. So this is a transaction. People can debate like this. See, you can debate that no, so this is not transaction. I'm not talking about all that. Whether genuinely this is transaction or not. It seems like a transaction or not. For a second, let's agree this is not a transaction. Because we are very knowledgeable people, we know this is not transaction. But some people come and argue, no, so this is transaction. Ab how will we say him that don't record this? Don't go and convince him that this is not a transaction. Tell him this is no financial transaction. Game over. In the route la madaka mudiyala, in the route la madichiranum. Purida? Now what is it out? I know. I saw your face. I understood. That's why I gave the second explanation. Okay, now convinced. First he was not convinced. Now he seems convinced. Okay. So financial transaction should be recorded. Non-financial transaction should not be recorded. Likewise, financial event should be recorded. Non-financial event should not be recorded. Now, in the factory, strike happened. In the factory, strike happened. Strike is an event or not? Strike is an event or not? People come and argue. Hey, strike is an event only, no boss. Argue பண்றது என்ன வேணா argue பண்ணலாம். இப்போ strike பண்ணிருக்காங்க. All the staff, labor of have done the strike in the what do you call factory. It's an event. Can I record it? Because for that there is no financial value. There is no financial value. So it is a non-financial event. Non-financial event. So I cannot record the non-financial event. I should record the financial event. Got it? Not got it? Okay. So if any data is given to you, you identify whether that data is transaction or event. Once you identify that data is a transaction or event, please check whether there is a financial value to it or not. And third thing, what will you check? This financial transaction or financial event should have happened in the course of your business. Should have happened in the course of business. Now, after your class gets over, can you see sir is coming in a different attire today? I never wear round t-shirt. Can you feel the difference? No. இப்போதான் வந்திருக்கீங்களா? எனக்கு போக போக தெரியும். I never wear this. Why I wore this is because after this I'm going for a movie theater. After I finish your class, I'll go for theater. Now, I've purchased 3 tickets today. 300 into 3. Total how much? 900 rupees ticket purchased. Kandipa popcorn sir will have? Yes. Yes, Kandipa I'll have. Popcorn. What else is nice? Cold coffee. Very good. Lovely. Very good. Then, nachos. Wow, lovely. Total tell me how much? All the 3 put together how much? Cold coffee, popcorn. Popcorn large size. Oh, 650. Yeah. Donkey fellow. Who's that? Kicked it. அவன் பாத்தியா அவன் இருக்க கடுப்புல கிக் பண்ணிருக்க கேமரா போட்டு பாவண்டா கேமரா 25,000 that is 1,500 rupees I'm going to spend. Oh my god, for the convenience I'll make 1,600. Total how much? 2,500. Now tell me people, is this a transaction or not? It's a transaction because this involves exchange of goods, services, money. எல்லாமே இருக்கு. மூவி பார்க்கிறது சர்வீஸ், பாப்கார்ன் சாப்பிடுறது goods. Adit paisa also I'm giving. So it is a transaction. And this is happening between 2 party. One me and second is theater owner. Okay, wow. It is a transaction. Now, this 2,500 rupees what I spent, tomorrow morning I'll come in academy and record as expenditure. Can I record this as expenditure? Apart from whose business point of view I'm talking about? Pratik says business point of view you're talking about. So can I record this as my expenditure in business? No. Though this is a transaction, though this is having finance, but this is not a business financial transaction. It is my personal financial transaction. This is my personal thing. Going for a movie with family and enjoying and spending money is my personal expenditure, not business expenditure. Apana, all the expenditure that I'm doing in business and personal life, everything can I record in business? Not possible. So in business, you're supposed to record only business financial transaction. Got it? Not got it? Personal financial transaction should not be recorded. So this 2,500 rupees money what I spent is not a business financial transaction. It is a personal financial transaction. So tomorrow when you go for accounting in any company, they'll give you one data. Owner of this business spent 2,500 rupees for movie ticket and popcorn. Will you take an accountant? Just because they gave you the sheet, account aptina, will you account? No. You will say what? This is personal financial transaction. I will not record. I will record only business financial transaction. Got it? Not got it? There is one disclaimer to that, which I'll tell not now, when the right time comes. When the right time comes, I'll tell one disclaimer here. Okay. Either game okay, va? Till this, is the game over? I mean, clear? Okay. Now, BFT. Once you come across BFT, you can record it. You can record it. Only and only if you have a document evidence, which means in business, you cannot record anything without evidence. Everything should be supported by evidence. Now the question is why? Why? Transactions are recorded in the books of accounts based on evidences. Oh my God. Sir, if this is not there, can we not record it? You can record it, but you'll be in trouble. You can record it, but you'll be in trouble. Now listen, why evidence is required? There's one client of mine whose income was 15 lakh and whose expenses were 6 lakh. Correct? How much is income? 15 lakh. How much is expense? 6 lakh. How much is the profit? 9 lakh is profit. Yes or no? The moment you earn 9 lakh profit, who will come and sit and watch you first? Income tax department. Give me my share. அப்படின்னு கேட்டு 30% ரூபா உரிடுவான். 30% will take. How much percent? 30%. Out of 9 lakh, 30% I have to give to income tax department. 9 lakh or 30%, how much? 9 lakh or 30%, how much? 2,70,000 rupees. 2,70,000 rupees. 30% given to income tax department. Who will have heart to give so much? Do you have the heart to give 30%? In 2,70,000 rupees, how many iPhone will come? At least 2 iPhone will come? At least 2 iPhone will come? Huh? Well, no. With 270, how much we can buy? What and all you can buy? So nobody will have heart to give this money to income tax. So what people do, no? People try to manipulate the profit. Manipulate the profit. You can manipulate the profit in two ways. One, you reduce the income on purpose. Or increase the expenditure. Increase the expenditure. Got it? Not got it? So here, this client, what he did, no? He increased the expenditure by 8 lakhs. Increased by 8 lakh. But what is my revised expenditure? 15 lakh is income. What is my revised expenditure? 14 lakh is revised expenditure. 15 lakh income, 14 lakh expenditure. What is the profit now? 1 lakh. Where is 9 lakh? Where is 1 lakh? Profit is reduced by how much? 8 lakh. How? நீ எந்த amount expense increase பண்ணியோ அந்த amount profit got decreased. Yes or no? So 1 lakh into 30%. Now how much should you pay to income tax department? Don't say 30,000. Only 30,000. Only 30,000. 270 where? 30 where? Only 30,000. How much money did you save? How much money did you save? 2 lakh 40,000. This is not called as tax saving. This is called as tax evasion. Fraud, forgery, for which you have to go to jail also. This is not tax planning. This is called as tax evasion, which is subject to interest, penalty, prosecution. Oh my God. So today's class is looking more like a law class than a accounts class. Now, government knows people will do like this. That's why what they did. What did they say? They said all the companies, it is mandatory for you to get your accounts audited by a chartered accountant. A chartered accountant will come and check your accounts, and he will sign it. Only then I will accept whatever you are submitting. Got it? Not got it? So who is a chartered accountant? A chartered accountant is an independent auditor who is auditing the books of accounts, who is signing the financial statement. in one of the meeting, our Honorable Prime Minister said, the power of a signature, a CA signature is more powerful than the signature of the Prime Minister himself. Because on the balance sheet, signature of Prime Minister will not be valid. There who has to sign? The chartered accountant has to sign it. That is the power of CA ka signature. So when I go to any company for audit, when the client says 14 lakh rupees is expenditure, you know what I ask? Show the evidence. Show the evidence. And this gentleman will show the evidence for 6 lakh because the 6 lakh is genuine expenditure. Bill irkum. Bill irkum. And this 8 lakh is cooked up expenditure. For this, bill cannot be created. No, sir. Today, ChatGPT and all is there. Somewhere I'll find out the trick and I'll create a dummy bill. What bill? Fake bill. For that, we have something called as forensic audit. Oh my God. We have something called as forensic audit. One case happened latest. One of the client fabricated the fake bill. So they used one AI technology, which where in that technology, in that forensic audit, it was caught that this bill was not old bill. Looking at the quality of the bill, the type of bill, some forensic audit they did, they found out that this old bill was created recently. So this bill were fabricated. So we have technology, such a technology where even if you try to do something, no, we will get caught. Purida. So that is called as forensic audit. In movie, you see, no, forensic investigation. Forensic investigation. Have you come across the term forensic? So like that in audit, also we have something called as forensic audit. They do in-depth testing for all the forgery, cheating, what you do know, for everything is a solution. Apana, you cannot easily fabricate any evidences. Even if you do it, you'll get caught. 1 second, ma. So for this 8 lakh rupees, if he's not producing the genuine bill, his expenses will be disallowed and he has to end up paying the more taxes along with interest, along with penalty. If possible, we'll also jail him. Got it, not got it. So now, whenever you record any transaction, ensure that you have a supporting bill. If your owner is not giving the bill, don't record it. Got it, not got it. So every transaction that is recorded in the books of accounts will have evidence, except a few. Which is that exception? I'll teach you when the right time comes. There are few transactions for which bill will not be available. For that, without bill, you can record it. For everything else, you'll have a supporting evidence. Got it, not got it. So once you identify a BFT, record it only when there is a supporting evidence. Supporting evidence. Clear or not clear? Now, Ma, what is your doubt? Got it. Got your point. Now, what he's telling is, sir, there are small business people, petty shop people, so many places where bills are not available. For that, what are we supposed to do? For that, for those kind of people, sole proprietorship concern, when they file their income tax returns, there are some exemptions, some advantages given to them, without which still we can manage. So that is something you have to learn when you come to CA intermediate in the taxation subject. You'll understand how to deal with such scenarios. Lovely question. He asked that, sir, in some business, genuinely bills are not available. Then what to do? For that also solution is there in the Income Tax Act. Got it, not got it. That in CA inter only you'll get the exposure. Now, can I go forward? Okay. Sir, once you identify a business financial transaction, what are we supposed to do next? Can we start the recording directly? No, wait. Whatever is the financial value that you identified, measure it properly, measure in terms of money. Now here it means two things. You're again lost today. Measurement has to be done here. Measurement here means two things. One, that financial value should have a monetary value and the unit of measurement should be same. Unit of measurement should be same. Now listen to me very carefully. What does this mean? I'm a businessman who does purchases in India and outside India. I'm a businessman who buys goods within India and outside India. Today I purchase goods worth 1 lakh rupees in India. I purchase from Chennai 1 lakh worth of goods. Any problem? This is my purchase value. This is my purchase value. Okay, va? Okay. Apart from that, today itself I did one more purchase of $10,000 from USA. $10,000 ka purchase I did from USA. So can I say my total purchase is 1,10,000? Can I say my total purchase is 1,10,000? Tell me people, online people. In matta purchase, what let's say the patara solomunima. Keep a video switched on online people. Can I say this? No. In mathematics, we have learned that the unit of measurement for two items that you add, the unit of measurement should be Same. Kg can be added with kg only. We cannot add kg with some other unit of measurement. Got it? Not got it? Apo, two data to add, the base, the underlying, the unit of measurement should be same. Here for this 1 lakh rupees, the unit of measurement is INR. Rupees means INR. INR ka full form? Indian rupee. IN rupee. Indian national rupee. Okay, wow. This is dollar. US dollars. Both are two different measurement. Apana, you cannot add these both. Apana, the unit of measurement should be made common. So before I record the transaction, I need to convert them into common denomination. In India, the denomination is INR. Apana, this is already in INR, which means this dollar I have to convert into INR. So for that, what do I need? Exchange rate, which means $1 if I go and buy in market, 100 rupees. Then for $10,000, if I have to buy and pay, but a $10 pay panna, from somewhere I have to buy the dollar, no? From somebody I have to buy dollar, no? So from exchange department, I'll buy the dollar. Purida. So how much money should I pay in total? $1 ka 100 rupees I have to pay. So if I have to pay $10,000, how much money? 10,000 into 100, how much it is? 10 lakh. Got it, not got it. So this, if I convert into INR, it is 10 lakh rupees. Apana, the international purchase what I've done is for 10 lakh rupees. And the domestic purchase which I've done is for 1 lakh rupees. Both ka unit of measurement is INR. Now can I add both and say 11 lakh is my total purchase for today. Now can I say today's total purchase is 11 lakh rupees. This is called as measuring in terms of money. So once you identify a business financial transaction, don't go for recording. Check whether it is in INR or not. Because in India, people do business with the international level. They do business with multiple countries. So people deal with dollars. What is there? Yen, dirhams, euro, yes, yuan, all these multiple currencies. Apana, all those international currency value should be converted to the INR. Got it, not got it? This is called as unit of measurement. This is the first step that you have to do before you record. Clear or not clear? Hell no. Okay. I'll give one more example. Staff provided service to business for 1 month free of cost. My question to all of you, is this a transaction or not? Is this a transaction or not? Transaction means service between two party. One is staff, another is business. 100% this is a transaction. Nobody can argue here. Okay, not okay. Transaction. Okay. Second, it should happen in the course of business. Now, for this, any financial value is there? Yes. If this work is continued, next month, we'll pay salary. Upon it's a financial transaction. This type of transaction is financial transaction. And this is happening in course of business. So this is BFT. Okay, wow. Now this is a BFT. Can I record it? No, because there is no monetary value to it. There is no measurement value. If you record also, what will you record? Salary in record panning liya. Enna record panning. We have got free of cost service. Means what? No monetary value. Which means the measurement of value here is 0. So if measurement is 0, can I record anything? If you record 0 in the books of accounts, what is impact of that? Nothing. So if any transaction which is of non-monetary value, can I record? Not possible. Got it, not got it. So this financial, monetary are linked to each other. Clear or not clear? So all I'm trying to say is that sometime you'll come across a BFT. You might have the unit of measurement INR also, but that is not measurable. If it is not measurable, you cannot record it. Got it, not got it? So in business, I gave one silly example here to make you understand this. But in reality, there are some transaction which will be a BFT, but you cannot measure it. When you come to CA intermediate, I'll give you few examples where you cannot measure certain transactions. If you cannot measure it, I cannot record it. Got it, not got it? Now, we'll not complicate so much at the 11th standard level. I'll keep it very simple. 1 second. So the first step of the accounting process is identifying a BFT or a BFE based on evidence. Once you identify a transaction, don't in hurry record it. First, you have to check whether it has got a monetary value, whether the monetary value can be measured or not. If it can be measured, ensure that the unit of measurement is Same. INR, INR, INR. If it is not same, convert dollars into INR. Convert yen into INR. Convert dirhams into INR. Got it? Not got it? Now, once this is ensured, now the next step will begin, which is recording. Now you will start recording. Now you will start recording. Sir, can I take the pen and start recording? No. Accounting is a systematic process of identifying a business financial transaction, which means to identify a BFT, there is a system. To measure in terms of money, there is a system. To record also, there is a system. You cannot take pen and record anywhere you want to record. Here, the recording will happen only either through journal or subsidiary book. This is the first step of practically recording the accounting entries. Here is where the practical accounting work begins. Got it? Not got it? So here, you are recording through journal or subsidiary book. Journal is a separate chapter. Subsidiary book is a separate chapter, which I'll discuss in depth when the right time comes. Now, when I do recording, I need to take care of certain steps. When I do recording, I need to take care of certain steps. Okay, wow. So now I'll come back to the example, what I gave here. I gave an example here, no? Business purchased goods worth 10,000 paid in cash. Can I take this example and continue? Because this is where I started the today's class with. Business purchased goods worth 10,000 paid in cash. Please tell me, what is the first step? What is the first step? Identifying BFT or BFE. What is this? It's a transaction. Why? This is involving exchange or transfer of goods and cash. There is funds between two parties. In that, one is business, another is third party. So this is a transaction. Is there any finance involved? Yes. Is this happening in course of business? Yes, it's a BFT. This I will record based on evidence. You have to have a purchase bill for it. Without purchase bill, as accountant, you will not pass the entry. Got it? Not got it? Okay. Second, measure in terms of money. Measure in terms of money. Do we have any measurement value? Yes, it is in 10,000. And plus it is in INR. Two steps ensured. Now third, you have to begin with recording. To begin with recording. Now to begin with recording, certain steps are involved. Now what is the first step? Identify the accounts involved in BFT. In the BFT, you have to identify accounts involved. Got it? Not got it? Now listen to very carefully. In a transaction, always you're supposed to search what? Accounts. Got it? Not got it? How many accounts minimum will be there? Minimum 2. Can there be 3 accounts? Yes. Can there be 4 accounts? Yes. Can there be 5 accounts? Yes. Accounts can be multiple, but the aspect of this account will be 2. Either debit or credit. Either debit or credit. Now, these accounts are there, no? You will be able to classify, or any person on this planet will be able to classify under 4 quadrants. 4 quadrants. There are 4 quadrants. One is expense quadrant. Second is income quadrant. Third is liabilities or capital, you can say. This is one quadrant, and one is asset. You take any account. You take any account on this planet. One are expense argum, other income argum, other liability capital or asset. You take anything. These are the only 4 things. Ultimately, your accounts is boiling down to these 4 things only. If you don't believe me, I'll ask you one question. What is the ultimate objective of preparing accounts? Tell me. Primary objective. I told in the first class. 2 things. To find the profit loss. That is financial performance. Next is financial position. To find the financial performance. Next is to find the financial position. Financial performance is identified by preparing a document called as trading and P&L account. In trading and P&L account, what data do you capture? Income and expenditure. To find out financial position, what document do you prepare? Balance sheet. In balance sheet, what do you have? Asset, liability, and capital. So ultimately, these 2 documents are focusing on 5 elements: income, expense, liability, capital, asset. Liability, capital, since both are similar nature, I put them together. Otherwise, liability is a separate element, capital is a separate element. Got it? Not got it? You take any account, you can tell, okay, this is either expense or income or liability or capital or asset. For example, cash. What classification? What is cash? Hell no, asset. Cash account, asset. Purchase account, expense. Sale account, Open your mouth and say income. Salary account. Salary I pay to my staff. Expenditure. Bank account. Asset. Land account. Asset. Furniture account. Asset. Creditor account. Liability. I have to pay, no? I have to pay because I purchase goods on credit. I have to pay. Liability. Debtor account. Asset. You take any account. It's my open challenge. You give me any account. Either I'll say it is expenditure or income or liability capital or asset. Got it, not got it. Clear or not clear? So, in the BFT, identify the accounts involved. Now, people, in the transaction layer, which account you want to capture? You tell me. In the transaction layer, either I should capture expense or income or asset or liability. What is capturable here? What is capturable? Cash and? Okay. Others. Others. Tell no. What do you want to capture here in this transaction? Which accounts gets affected? Which accounts gets affected? Open your mouth and say. Purchase. Because I want to record my expense. In business, recording expenses advantage. Why you know? If income tax department does not allow me to record expenses, my profit will be equal to income. For example, in that example I told you, no, that my client well example, how much is income? 15 lakh. If income tax department does not allow us to minus expenditure, what is my profit going to be? 15 lakh. If profit is more, tax is more. Apana, or business la expense is good or bad? Good, because expenses reduce your profit, which reduces your tax. Clear or not clear? So, in this transaction, as a businessman, will I not be interested to record my expenses? Because expenses help me to reduce the profit, helps to reduce the taxes. So, this account I'll open, purchase account. Okay, not okay. So, in this transaction, which accounts is getting affected? Purchase account, yes or no? I'm teaching you that in a transaction, how to pick up the accounts. Unnala accounts pick up panna mudiyala, eppadi entry pass பண்ணுவே? When you pass a journal entry, cash account debit to bank, purchase account debit to cash, apana, you need to know how to pick up the account. Picking up the account is an art. And that art is what I'm teaching you. I'm not making you by heart anything. I'm giving you logic to it. How to think. I'm not making you by heart. I'm giving a logic to it. So I need to record my expenditure. Yes or no? So I will take purchase account. Next, which account? Next, which account? Cash account. Why? Because I paid cash. So my physical cash got reduced. In pocket, I had 11,000 rupees. In pocket, I had 11,000 rupees. How much paid? 10. How much is balance? 1,000. Where physical in my pocket, only 1,000 is pending. And I know book level cash irukku 11,000. Up on the 10,000 minus panna kudada? Panno dane. So the next account that I capture is cash account. Got it, not got it. So once you identify a BFT, in that, identify which account should be captured for accounting purpose. Got it, not got it. Sir, can you give one more example? Okay. Business sold goods worth rupees 15,000 and cash received. Cash received. First of all, is this a transaction? Is this a transaction? Yes, because this is involving exchange of goods with cash funds between two party in which one is business and another is customer. Because I'm selling to whom? Customer. It's a transaction. Does this have financial value? Yes. Is this happening in course of business? Yes. Upon this is BFT. Second, measuring in terms of money. Measuring in terms of money. Can I say this is INR? Yes. And there's a measurement value to it? Yes. Apo, can I go to the third step? Third step is recording. In recording, what is the first step? In this BFT, identify accounts involved. To pass the entry, I need to identify accounts. Which account I'm interested to capture? Sir, this transaction is giving me income. So I need to capture sale account. Sale account. So I'll open sale account to capture my income. To capture my income. Next, cash received, because in pocket I had 1,000 rupees and I got 15,000 from my customer. So what is my physical cash now? 16,000. But in book, how much is there? 1,000. When I started from home, I started with 1,000 rupees in pocket And in books also, book na enade accounts 1000 is there. Physically I got 15,000 from customer. Appo physical cash 16,000. Appo book le 16 varanolla. Appo 15 I should record. I should open cash account. In cash account I will record it. So cash account I will open. Got it? Not got it? I know. So once you identify a BFT, in that you're supposed to identify accounts involved. Now you will have a doubt here. Sir, goods, why didn't you record, sir? I know. For this, you have to wait. Goods is not a transaction. It is an event. So when you purchased 10 laptops, you record purchase entry. Okay, wow. When you sell 10 laptops, out of 10 laptops, when you sell 9 laptops, this is sale entry. This is sale entry. How much is remaining laptop unsold? One laptop is there. No. This one laptop will now be called as unsold product, which will be called as stock. Now, when this goods is turned in form of unsold stock, that is when we record it. So goods we record when? Not at the time of purchase, not at the time of sale, at the year end. At the end of the year, we record goods in form of closing stock, not during the purchase and sale. We record at the end. Either a logic or not now. As we do accounting, no, when we come to final accounts, that time you'll understand the logic behind it. Today it is too early to make you understand. As of now, I can say you that goods and stock are never recorded when the purchase and sale is happening. When the purchase and sale is happening, purchase value is recorded, sale value is recorded. Because when I purchase, I don't know how much is my stock. Stock will go, but not into accounts. It goes to stock register. To know physically how much stocks I got, how much I sold, to keep a physical count of it, it goes to stock register, but it does not go to accounts. In accounts, when will I record the quantity? At the end of the year in form of closing stock. Now, there's a big logic behind it, which I can tell you only in the final accounts. And this logic, my dear friends, let me tell you, a lot of people who completed 12th CA Foundation, CA Inter, they also struggle to know this. And that logic I'll give you in the 11th itself. It's my promise to you. But today it is too early for me to discuss because we're in the early stage of accounting. We're learning it for the very first time. So I cannot complicate in the beginning. Am I loud and clear? Okay. Now, in the classes to come, we'll discuss multiple questions, multiple transactions. As you progress, you'll automatically know how to pick up the accounts. Today, you will find it difficulty to pick up the accounts. But after 1.5 months, you will find this very, very easy. It is my promise to you. Okay, sir. We identified accounts. I gave you 2 transactions. One is purchase transaction, cash purchase transaction. Second, I gave you cash sale transaction. Okay, wow. This account identify pandingla. Did you identify the accounts? Yes. Now, once you identify the accounts, next step is classify them as per their nature. Classify them as per their nature. Now, tell me, people. If I come back to this transaction, you said purchase account. Purchase account is what classification? Purchase is what classification? Expenditure. Is this difficult? Once you identify the accounts involved in the BFT, what is the nature of accounts? Is it difficult? No. Okay. Second account you said is cash account. Cash account is what classification? Asset. Any problem? Classify the nature of accounts into expense, income, asset, liability, capital. Motta classification. 5 classification. Any problem? No. I gave one more example. Which example? Business sold, goods worth 15,000 for cash. In this, you said how many accounts? 2 accounts. First account is sale account. Sale account, what classification? Income classification. Cash received is what classification? Asset classification. Any problem? So first step over, second step over. Is this clear? Now that you have identified the accounts involved, and now that you have classified this, the third step, what you will do is apply the rules of debit and credit. Out of these accounts, what you have identified, some will be debited, some will be credited. But how to know what will be debited and what will be credited? For that, you have to study 2 rules. Either golden rule or modern rule. Either golden rule or modern rule. Golden rule is also called as traditional approach. Traditional approach. Name itself says this is old rule. Golden rule is olden rule. Golden rule is olden rule. Useless rule. Oh my God. Such a big terminology used, sir. Golden rule is useless rule. Why useless rule? Because in the classes to come in the future, I'll prove it to you that there are many journal entries which you are not able to logically record debit and credit using the golden rule. That's why in recent times, we have come out with a new rule called as modern rule. Modern rule. Modern rule is called as American approach. Also, it is called as accounting equation approach. So the accounting equation chapter that you've completed in school is based on this model. This model. So in your syllabus, the two rules of debit and credit has been introduced. One is golden rule, second is modern rule. Unfortunately, in state board, modern rule is not introduced. Only golden rule is there. Only golden rule is there. That's why the state board people, when they come to foundation, they struggle in the basics of accounting. Because in your entire 12th state board, and for you, 12th CBSE, we will never apply golden rule. We'll only apply modern rule. Constantly we'll apply modern rule. And through modern rule, any entry you can pass and decide what to debit and what to credit. Okay, not okay. So golden rule we'll study in the next class. 2 classes will spend on golden rule and 2 classes on modern rule. So you have to apply the rules of debit and credit to decide that which account should be debited and which account should be credited. This rules of debit credit is based on double entry system of accounting. Double entry system of accounting, who gave? Sir Lucadi Pasquale said that accounting should be based on double entry system of accounting, where every transaction should have twofold aspect. One should be debit and another should be credit. And all the transactions are recorded on the basis of evidence. Got it? Not got it? So when you do all this and do debit credit, there's a format to it, which I'll discuss in the journal topic. If you do the entries in journal or subsidiary book, we say that you have recorded. The recording happens either in journal or subsidiary book. Recording happens either in journal or subsidiary book. Got it? Not got it? Hell no. Okay. If you think that, sir, my accounting gets over here, Aptina, you're wrong. Sir, we recorded, sir. What do we need now? Now, those who have done journal, have you done journal in your school? Journal is done? Okay. There is a problem in journal. Tell me what? There's some problem in journal. Tell me what? Very good. Clap for him. तुम कहाँ से दिमाग लेके आता है? Very good. Clap for him. He's saying, sir, a particular account, if I want to know the total of it, I cannot find the total. So the biggest drawback of the journal is the total of the accounts is missing, because we record the journal in a chronological order. As when the transaction takes place, I record it. For example, today I purchased 5 laptop. I'll record it. After this, I spent 100 rupee for tea. I will record the tea expense entry. After that, when customer came, I sold the product. I'll record the sale entry. Upon in the journal, we are recording multiple transactions one after the other. Upon today, purchase transaction also is recorded, sale is also recorded, expense also is recorded, asset also recorded, liability also recorded. Everything is recorded in order one by one. 1, 2, 3, 4, 5. 2 is purchase. 5 is purchase. How do I know the total? Total is missing. Total is missing. So for the purpose of totaling, all the transaction that is recorded in journal is posted to a place called as ledger for classification purpose. For classification purpose. If you have to make you understand in simple term, this is bucket. This bucket is called as journal. In this bucket, the blue balls are purchase. The green balls are sales. The black balls are salaries. Red balls are cash. Purida, is it possible for you to sit and count how much is red ball, black ball, green ball, blue ball? This is your journal. Because journal is one book where all the transactions you record together. So at the end of the year, as owner, I want to know what is my total purchase? What is my total sale? What is the total salary I pay to employee? With the help of journal, you cannot tell me. Hence, for totaling purpose, all these transactions are shifted to one place called as ledger, which is T-shaped account. Upon cash account, sale account, salary account. Each ball will go to one account. So I told you blue ball is what? Blue is purchase, I said. Blue is purchase, I said. Yes or no? First I said purchase. So blue is purchase. purchase account. So all the blue balls will go to purchase account. All the blue balls will go to purchase account. To be more precise, all the blue balls will go to blue bucket, which is purchase account, T-shaped format. Green ones will go to green bucket, which is sale account, T-shaped. Purida. Then I said red is what? Cash. So cash will go to red bucket, which is cash account, which is T-shaped. So what are we doing? Each and every account, we are classifying separately. Why? What is the purpose of classification? So that the totaling can be done. So all the transactions are classified through ledger for the purpose of totaling. Got it? Not got it? Sir, with this account's over, no, sir? No. Once you prepare the ledger, now understand, no. You guys have invested in Reliance. Imagine you guys invested in Reliance company. Mukesh Bhai. In his company, you invested money. You want to know, Mukesh Bhai, my paisa you use, no. Using my 1,000 rupees, how much business did you do? Show me all the accounts. If he gives you ledger, will you be happy? Ledger will be 10,000 pages. How many pages? 10,000 pages. Cash account, T-shaped account will go for some 100 pages. Purchase account some 100 pages. Like that, 10,000 pages he's sending to you. Take cash account, take sales account, take all the account is giving. உன்னால படிக்க முடியுமா? படிச்சிருவியா? 10,000 பேஜ் படிச்சிருவியா? நீ அவ்வளவு பேர் அப்பாட்ட கர ஒன்னும் முடியாது. So we need summary. What do we need? Summary. So we need summary. So from ledger, all the balances of ledger, total of ledger will be transferred to one place called as trial balance. Trial balance to check arithmetical accuracy. From trial balance, we'll identify income item, expense item, and we'll put it in profit and loss account so that we get the financial performance, profit or loss. Then what is balance in the trial balance? Asset, liability, capital. Very good. That will go to the balance sheet to measure financial position. Now, when I prepare the P&L and balance sheet, I say my financial statement is ready. So with this, accounting is over. No, sir. No. Once accounting is over, you need to analyze the data. What will you do? Analyze the data. Sir, why should we analyze, sir? Accounts prepared, game over. No. My company ka previous year turnover 10 crore. Current year turnover 8 crore. Previous year turnover how much? 10 crore. Current year turnover 8 crore. Which year I did best? Last year. How did you get to know this? By doing analysis. So analysis, if you do all the financial statement, you will actually get to know which company is doing better, which company is not doing better. And you will want to invest in that company which is doing better. So after your trial balance, P&L balance sheet is over, financial statement is ready. The next step is to interpret or analyze the financial statement. And this is there in your syllabus, not in 11th standard, in 12th standard. You have something called as accounting ratios. You have something called as cash flow statement. You have something called as tools of financial statement. Very well within your syllabus. I'm not teaching anything which is not there in your syllabus. So this will be covered in 12th standard. And once you analyze the financial statement, the last step of the accounting process is communicating the results of the analysis to the users of financial statement. So whatever analysis as a chartered accountant you do, you have to inform to the stakeholders, to the users. Who are the users? Banker, investor, owner, employee. To these people you have to communicate. Got it, not got it. With this, the entire accounting process gets over. இன்னைக்கு ஒரே நாள்ல இந்த மொத்த process புரியாது. Is a summary of the process. Understand? Identifying a BFT, measuring in terms of money, and recording is one chapter. Journal is another chapter. Journal, subsidiary book, another chapter. Journal, another chapter. Ledger, another chapter. Trial balance, another chapter. P&L balance sheet, another chapter. Till 11th. Then financial statement analysis in 12th, another chapter. 3 chapters we have. So if you think that today itself this entire accounting process should nicely get registered in my mind, means it is not possible. இப்போதான் முளைச்சிருக்கீங்க. இன்னும் நிறைய போகணும், பார்க்கணும். It will take time. So what am I discussing? I'm just discussing an outer line perspective of accounting process. I've just drawn one boundary. Oh, this is what is accounting process. It begins with this, ends with this. Inside, lot of masala is there. This masala you'll take entire 11th, 12th, CA foundation, CA inter, CA final to completely learn. உனக்கு வந்து accounting expert ஆகணும் அப்படின்னா you have to spend 5 years with me. Got it, not got it. So today, if you think I'll become expert in everything, not possible. But definitely, I'll make you more knowledgeable than your friends. That is promise. That is promise. The masala what I'm giving, nobody will give you. That's my open challenge. And you have seen also, no? By now. Yes or no? Tell no. No. This is end-to-end accounting process. So can we do a very quick revision of this accounting process? Now, first of all, before that, I want to know, why do we have this process? Why process? Tell me something. When you went to your initial standards, you started with what? Play group, pre-KG, LKG, correct? School, play group, play school. In play school, what did you learn first? Very good. Alphabets, A, B, C, D, alphabets you learned. You studied in wrong school then. My son, in play group, pre-KG, play group pre-KG, but I realized pre-KG. Pre-KG, they started teaching alphabet. LKG நிறைய வந்துருச்சு, UKG நிறைய வந்துருச்சு. Addition subtraction is doing in UKG now. People have become advanced now. When I was in UKG, I dummy fellow, nothing we knew. ஒண்ணுமே தெரியல. இன்னைக்கு இருக்க UKG பசங்க அட்வான்ஸ் லெவல்ல இருக்காங்க. இன்னொரு நாள் எக்ஸாம்பிள் கொடுங்க வேண்டாம். Today I wanted to complete something, so less time is there. I'll give an example to show you how people are advanced today. These kids of this age, 5 years, 6 years, 4 years, next level crazy people there. Anyways, so when you were studying the English language, what did you begin with? Alphabets, correct? No, in pre-KG, LKG, alphabets. Okay, what is the next step of alphabets? The alphabets you will try to put together to learn how to form words. As you progressed to the higher standards, your school teachers taught you that how the words can be, constructed into beautiful sentences. Then as you climbed up the ladder, when you came for higher grades, your teacher taught that how the sentences should be put together to make a meaningful paragraphs. Now, once you go to your higher grades, to professional courses, your school teacher or college teacher or professional course teacher thought that how this paragraph should be put together to make beautiful chapter, you say, essay, you say, whatever it is. Then as you progressed, when you became author, they taught you that how all these chapters put together, we can make proper books. This is the complete process of learning an English language. This is how the process, there's a process. Anything and everything that we do is driven by a process. School today, the school is being operated, the school is operating under a process. This time, you have to go to the school, then assembly happens, then your period happened, then this, that, everything is a system. This is how the fee is collected. Everything is a system. Tomorrow, if you go and do any job, you'll do job in systematic manner. Tomorrow, when you do any business, you'll do with systems only. Yes or no? So we are driven through systems. So like how we have systems everywhere, for accounting also we have a system. So accounting is a systematic process of what? What is the first step? Identifying. I want to put that process in your mind. Identifying what? BFT or BFE. Any problem? Okay. Once you identify a BFT, can you record it? No. Second, you have to measure in terms of money. Measure in terms of money. Means what? Here it should be measurable. And second, that the unit of measurement should be same, common. Got it, not got it. In India, unit of measurement is INR. Third, now recording either through journal or subsidiary book. So this is a separate chapter. This is a separate chapter. When it comes, I'll tell you what is the meaning of these both and what is the difference also. Now, in this, what is the first step? For recording, what is the first step? Now, the BFT, what you've identified, in that, what are you supposed to identify? Accounts. So identify accounts involved in BFT or BFE. In the BFT or BFE, identify the accounts involved. In a transaction or an event, minimum how many accounts is possible? Minimum 2. Maximum, no limit. No limit. Anything it can be. No limit. Got it, not got it. Okay. What is the next step? I forgot. Shit, I forgot. The accounts that you've identified, you have to now classify them into either asset or liability capital or income or expense. Classify accounts in asset, liability, capital, expense, and income. Okay, not okay. After this, apply golden rule or modern rule to decide. Why are we applying modern or golden rule? To decide which account should be debited or which account should be credited. Got it, not got it. So golden rule will tell you, oh, this account debit, this account credit. Or modern rule will tell you, this account you debit, this account you credit. So in a transaction, how many debit should be there, how many credit should be there? If there are 4 account, 2 debit, 2 credit means there can be multiple debit, multiple credit. But the total of the debit and the total of credit should be same. Got it, not got it. So aspect should be only 2 only. So the accounts that you've identified above, either you'll put them into debit category or credit category. So I can debit multiple accounts, I can credit multiple accounts. See, I told you there should be minimum 2 accounts. ஓகேவா ஒருவேளை 5 அக்கௌண்ட் வந்துச்சு அப்படின்னா இந்த 5ல something is going to be debit, something is going to be credit. If 2 is debit, 3 is credit. Or if 3 is debit, 2 is credit. Got it, not got it. So accounts can be multiple. Their classification debit credit could be multiple. But I'm telling you, classification of aspect is either debit or credit. Nothing about this. Got it, not got it. Aspect rendu now. Either debit or credit. Either debit or credit. Apart from debit credit, is there any other aspect? Not possible. Clear or not clear? This debit and credit aspect is coming from which system of accounting? Double entry system of accounting. Clear or not clear? Okay. Once you record in journal, accounts over, sir. Accounts over, sir. Not possible. There is a flaw in recording. In journal, there is a flaw. What is the problem? The format of the journal does not facilitate totaling. I cannot total what is purchased. Total purchase, how much? I don't know. Total sale, how much? I don't know. Total cash, how much in journal? I don't know. So journal does not facilitate totaling. So for totaling purpose, what do? We post all transaction one more time to a place called as ledger for the purpose of classification so that I can get the total. Got it, not got it? With this accounting over, sir? No. We want summary. So all the total of the ledger will first go to trial balance. Okay, not okay? Then from trial balance, I will identify all the accounts which is of income or expense in nature. In the trial balance, there are 5 type of accounts. Which 5 type of accounts? Asset, liability, capital, income, expense, like that multiple account. In that, I have to pick up which account? Income, expense. This I will send where? To trading and P&L account. Why? To find out profit bar loss. In trial balance, there are total 5 types of classification. In that, 2 I send it to income, expense I send it to trading P&L. How many balance items? 3. Which are what? Asset, liability, capital. This I'll send where? To balance sheet. Got it, not got it? To find out the financial position. Got it, not got it? Okay. With this, technically accounting is over. But expert says that further accounting is there. Nee financial statement prepare panna mattum pattadu. This trading P&L and balance sheet both put together is called as financial statement, which is report card of the business. Preparing this alone is not sufficient. You need to analyze. So 6th is analysis. Analysis of the financial statement. For that, multiple tools are there, which you study in 12th standard. Ratio analysis, tools of financial statement, cash flow statement. Using this, we try to analyze whether the company is doing well or not. As investor, should I invest in this company or not? I will decide based on the analysis. Got it, not got it? So this analysis has been done by chart accountants and multiple other analysts in the company. Then the result of this is communicated. To whom? To the users of financial statement. Who are the users of financial statement? Owner, investor, banker means lender, who's lending the money, lender. Then employee, Then government authorities, income tax department, GST department, MCA, that CA, this CA, all the people. Then customer. How many people in total? There are 7 users of financial statement. I'll discuss this some other day in detail. This is too early for me to discuss. I will discuss this also. This is there in chapter 1. One day I'll discuss. Properly I'll discuss. This I discussed at every level. 11, foundation, inter, every level we discuss. This is very, very important. But it's too early for me to discuss right now. Got it, not got it. Little bit you have to get more used to accounting. Then we'll come and discuss masala here. With this, your accounting process is over. Clear or not clear? Now, in tomorrow morning class session, what are we going to learn? Golden rule. Golden rule. So in first class, we'll understand what is the rule trying to say. How do we classify it? After that Tuesday, we will do questions based on golden rule. So you'll feel more confident about it. Then Thursday, when we meet, what will we do? Modern rule. Then Saturday, what will we do? Questions based on modern rule. Got it? Not got it? Hell no. With this, a strong base of accounting will be established. After that, the next chapter that we're going to start is journal. That is the real masala. And for doing journal properly, whatever I discussed right from day 1, you have to remember. If you don't remember, you are not screwed. You are royally screwed. Every class, whatever we are studying, we have a new concept which has got a direct connection to your upcoming classes. Not just in 11, also in 12th. In multiple places, I'll tell this question I'll ask in 12th and correct at 12th. If you don't believe, ask your students, what do you call seniors. Yesterday's class, I said, in the topic 11th, na touch pannente. People don't remember. Because people are Gajani. They'll forget. You guys also say, what are you laughing? You also will forget when you come to 12. Okay, va? So I'm trying my level best to ensure that 1, we don't drag too much also. Second, we don't finish too much fast also, because this is foundation. You're learning for the first time. I cannot, just finish like this. So to put all the data properly in your mind, and please don't mind me repeating few things again and again. You might feel irritated initially that what sir is repeating again and again, but I'll give you one example, not today, just let a couple of classes go by. By repeating this n number of times, what is advantage for the student? I'll prove it to you with evidence. We are driven by evidence. With evidence, I'll prove it to you that my repeating 10 times, how it is going to help you. With evidence, I'll come back to you. Until then, we will call off for the day. Okay, va? Chalo. Can we wind up? So guys, that's all from my side for this session. I will see you all tomorrow morning, sharp 10 a.m. Until then, bye-bye. See you. Take care.